And Sergey, how big this can get in the future?
Just take the entire financial system, all of it, all assets, equities,
Nice.
commodities, real estate, gold, all of it, and then assume there's another 10 or 20% of assets more that haven't been generated because it's very hard to turn them into an ownership receipt. So there's an additional 10 or 20% of new things, shares of a farm, shares of a solar panel operation, shares in a restaurant, shares in owning a piece of real estate, carbon credits. So just take the whole thing and move around 10 or 20% depending on the creation of more assets at the edges of the financial system.
Nice.
Yeah.
A big goddamn number.
Yeah, that's a big number.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be jumping into some video clips and some fundamentals, confirming to you all some of the things that we have been attempting to convey on the CYPRX platforms for the longest time, that bank and financial institutions are 110% interested in this digital asset landscape and that it will scale to the multi-trillions of dollars worth of value in the near future, that they are 110% interested in utilizing DeFi protocols to expand their wealth, not only for themselves, but also for their clients. And in today's video breakdown, we're going to confirm that for you all, which again, just solidifies why you all should be taking advantage of DeFi opportunities in the now, at least at a bare minimum, educating yourself on how to use DeFi to expand your wealth before the next massive bull market cycle. So with that being said, if you all enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. We do appreciate the love and the support. I know that you get tired of hearing it. I get tired of saying it at the end of the day, but it does help this platform grow and it does boost the YouTube algorithm, putting video breakdowns like this in front of more individuals like yourselves. So with that being said, let's jump in, let's share screen, and let's go down the rabbit hole today and just talk diligently about some of the things that I have to share with you all today. So we're actually going to start here. And the reason why I like showing you guys stuff like this is just to spread awareness that this goes relatively unnoticed. Not a lot of people even understand that they can utilize their digital assets to expand their wealth by, taking advantage of DeFi opportunities in the now. So this is a video breakdown, a panel discussion from Token 249 from Dubai that was uploaded only 3 months ago. So it is recent and only has 678 views. Now, the reason why I'm showing you the amount of views, the lack thereof, in my personal opinion, on this video breakdown is because remember I posted to you guys on the X Space just back on July 23rd. According to the AAA report, in 2024, there are only 562 million active cryptocurrency owners worldwide. So take that into consideration that is roughly only about 6.8% of the world's population. And then take that into consideration when you're looking at the amount of views that a video breakdown like this has via some of the video clips that I'm going to share with you all today, that not a lot of people, again, are even paying attention to the opportunities in the DeFi ecosystem, let alone even know that it exists, right? And so I want to confirm to you all, because I mentioned to you all that DeFi is the new wave. This is a previous post where I'd mentioned to you all how to grow your wealth and how I was earning 1% per day, which equates to about $25 per day on roughly about $3,000 of initial capital invested on a specific DeFi platform that we utilize in the Wealth 28 Club here at CYPRX, which yields me about $700 per month. But I mentioned to you all in this specific video breakdown, the goal of investing is to make money consistently. Most crypto investors are waiting around for their special digital asset to pop off, hoping and praying for new all-time highs overnight, when in reality, your crypto could be earning you more crypto, stacking bigger bags while you wait for the next bull market cycle. And that building a DeFi portfolio allows you to maximize yield earning platforms that offer way more than traditional investments if you know how to use them in a mature and efficient fashion, right? Which is, again, what we educate people on here at the CYPRX Wealth 28 Club. I want to play a video clip of an individual talking about this same exact thing, that you should actually be doing something with your digital assets, not just holding them, waiting for them to mature, and that, again, you should be taking them and earning yield on them. Take a second and listen.
I mean, it's almost too stupid to say, and we're at a place called Token 2049, so obviously tokens are very front and center for a lot of what we're talking about, but like, you actually have to do something with the token in order for the tokenization of that asset to be worthwhile, right? If you just tokenize something that you're going to buy and hold and then later redeem when the asset matures, like that was stupid. You didn't really need to tokenize that. You could just use a PDF in like a Web2 form, and like you actually don't get any real benefit from tokenization. The major benefits of actually tokenizing these assets are you do something, usually we call this DeFi, where it's sort of one of two forms. You're either using the token as a means of payment, so stablecoins come in here very strongly, or you're using it as a form of collateral for some sort of other financial activity. So there are two major uses of stablecoins right now. They're largely used as dollars on crypto exchanges in terms of pairs. Tether is primarily used in this context. So if you're trading BTC versus USDT on an exchange like Binance or OKX or Bybit, et cetera, you're trading against the USDT, and so you need to have the USDT on that exchange. Yeah. USDC is more used in DeFi, where you're trading things against a cash leg, say LPing in a Uniswap pool. But we very much believe like those dollars that you're using as collateral, you should be earning that yield yourself. So our version, we very much believe like those dollars that you're using as collateral, you should be earning that yield yourself.
So that is just confirmation that it's not just coming from me telling you all this, but it's actual pioneers in the digital asset ecosystem telling you all that your digital assets shouldn't just be sitting dormant, collecting dust, and should be earning you yield to some degree. Now, here is another video clip of a representative on this panel discussion going on to confirm that banks are interested in offering DeFi and yield-bearing opportunities to their clients.
And so I think both of these groups are each other's biggest markets. So I think the Web3 people want high-quality collateral, and I think the bank people want access to high-yield, high-return, innovative, cutting-edge products for their client base. And I think the bank people want access to high yield, high return, innovative, cutting edge products for their client base.
The reason why I'm showing you all these video clips is because here at CYPRX, we don't just say these things to you all to get you to sign up for our course or to get you to start investing in the crypto space. We're attempting to really educate you all on the new wave of possibilities that are unfolding in this crypto space for you as a retail investor to keep up with the moving times. Now, I want to play another video clip of an individual representative on that same panel discussion confirming that banks and financial institutions do for a fact have native digital asset or blockchain teams embedded into their infrastructure, again, in order to help develop and grow the back-end system so that way these financial institutions can eventually come on board. Take a second and listen.
Yeah, so the thing that's changed in the last 2 years is that most top global banks now have a dedicated digital asset team. Yeah. So maybe 2 years ago, I would be working with people in the innovation group who would be doing experiments. Now, as of maybe 3 years ago, then more 2 years ago, and now much more in the last year, there's a digital asset tech lead, product manager, and so on. And so they are dedicated to the digital asset world, which is basically our world.
And now here are some supportive fundamental pieces confirming that to be the case. You can see right here, top 30 global banks in blockchain. And I mean, it's not missing a beat. You probably most likely know at least 3 or 4 of these massive global financial institutions. If not, are most likely using them yourself. I personally am utilizing at least 3 of these financial institutions myself here in the United States. And look at what this says, just to confirm what that panelist said. The focus on blockchain tokenization and DeFi, again, particularly mentioning DeFi and digital investment products by those financial titans, underscores a significant ongoing shift in the financial industry. Our findings are more than empowering and clearly demonstrates that the commitments of these major banks with a combined value of more than $43 trillion are not just words, but a testament to the massive potential and transition to the blockchain technology, tokenization, and the future of digital assets. Now, here is another fundamental piece confirming what that individual representative said. The new financial era. Nearly 80% of major financial institutions are now building a dedicated team to develop digital asset strategies. We're going to talk about those digital asset strategies here in just one second, and investing heavily in staff training and development to foster this expertise. Here it says these finding institutions are not just interested in digital assets, they are diving in head first. So again, take into consideration that these financial institutions are 110% building out strategies. Again, what should you all at the end of the day be attempting to do? So now I want to play a video clip of one of the panelists talking about stablecoin yield, right? And how every dollar that you earn should be earning yield for you. Take a second and listen.
Because what we do on the PVO1, when we get some USDC, turn them into dollars, and then we buy an asset. And in doing so, the balance of the stablecoin goes down by 1. And not everyone seems to understand that. But in reality, if you look at the long run, the economics of stablecoin should be that you don't need $1 more of float of a stablecoin, not $1 more than what you need to make payments. And that's why 24/7 markets and 24/7 hour yield is interesting, because normally, once you've made your payments, whoever receives your money, your stablecoin, they should immediately put it in something that generates yield. Yeah. They should immediately put it in something that generates yield.
Now, he also goes on to mention that earning yield is cool.
Well, to me, you have to go back to the first principles. 24, like Sergey said, 24/7 markets.
Yeah, 24/7, yeah.
That's interesting. Maybe not so much because we want to trade all the time, but the idea of accumulating yield in real time, that's kind of cool, actually. Yeah.
And so again, showing you all some of the information that we put out, not only in the CYPRX Wealth 28 Club, but that I put out to you all publicly. I said to you guys on July 28th, stablecoins are a great way to start building a DeFi portfolio if you want to mitigate impermanent loss, which is one of those big, major, terrifying words in DeFi that a lot of people are so afraid of, but don't know how to, implement a strategy, a mature approach to the DeFi markets and mitigate that. Pretty much like building a high-yield savings account on steroids, some DeFi stablecoin pools offer 40 to 60% APR that you cannot find in any traditional investment. Now, I want you to take a second before I read this little tiny Ripple Medico, the functional of evolution of digital asset post to you guys. Listen to what this representative said. And remember what I've said to you guys in previous video breakdowns, that these financial institutions, for a fact, know that they can earn more yield on their assets. Take a second and listen to this gentleman.
How big this market can get. So right now we said, tokenized real world assets is around $200 billion, which is small. It's 7-8% of the overall crypto market versus, TradFi is much, much bigger. Equities, 100 trillion, real estate, 300 trillion, and we can disrupt all of these markets together. So let's assume, the crypto market will grow over the next 4 years from 2.5 trillion to 10 trillion, 4x. Are we still going to keep our market share as real world assets on chain, 7 to 8%, or are we going to outgrow this? Max, what's your view?
I think that wherever we can end up, it's important to, my opinion at least, is that first and foremost, we depend on the size of the crypto market. Because some people think that if we tokenize real world assets, then that's going to grow the pie. I actually don't think so. Because what is interesting to crypto investors is more of a barbell strategy. So if you've got stablecoin or crypto and you switch back and forth, you need to have access to US treasuries. But you need to have access to real estate from the crypto ecosystem? Maybe not. And I'll give a personal example. Until recently, I was one of the biggest users of Ondo personally. No, I'm not, but nothing against Ondo. The reason is simply that, whereas for a long time, other startups of that tokenize were offering me some sort of trade finance deals at 12% a year, I was like, I don't understand it. I want none of that. I'm very happy with my 4.5% on Ondo. But then, come the bull market 1 or 2 months ago, and now you can get 15% on Aave. I personally consider Aave to be roughly risk-free. And so I was like, 5% on Ondo, 15% on Aave, so I switched. But to be roughly risk-free. And so I was like, 5% on Ondo, 15% on Aave, so I switched.
So he literally confirmed that he switched from Ondo over to Aave because it offered him higher yield. These financial institutions know that they are able to do this. And here you can say this, this piece from Medico and Ripple. The functional evolution of digital assets goes on to say stablecoins are designed to maintain stable prices by pegging their value to underlying assets. Investors may use stablecoins to temporarily store value after selling a particular cryptocurrency, avoiding trading fees associated with converting back to fiat currency. They are widely used in the DeFi market to generate yield while mitigating market volatility. Just like I mentioned to you guys, building a DeFi strategy with stablecoins to mitigate impermanent loss and to mitigate dealing with the rest of the cryptocurrency market volatility that you may experience, dealing with regular assets paired up against a stablecoin or dealing with two cryptocurrencies paired up against each other in liquidity pools. Okay. Now, here is another fundamental piece. This one was very interesting, and I think I went over this in a previous video breakdown, but I just thought that I'd throw that in there because of the key vocabulary that is in this document. Shout out to Smoke for this one. He actually shared this to me about a month ago. Institutional DeFi Navigating the Landscape, European edition, June 2024. And look what it says right here. Tech and customer need come together. This suggests that we are in the calm before the storm that may end up shaking the foundations of traditional finance. I mean, like, it's insane what's happening right now. And then right down here, this is what solidifies everything. It says the bigger risk by far lies in underestimating the approaching storm. Do you know how many people are skeptical about DeFi or skeptical about crypto because it lacks regulatory clarity? That's besides the point. If you're not taking advantage of these opportunities in the now, it's most likely that you are going to fall behind comparatively to somebody that takes a mature approach and does. I've talked to you guys publicly on the CYPRX platforms how we here at CYPRX are taking advantage of DeFi opportunities. For example, here's a video breakdown from July 22nd talking about using stablecoins to earn yield, fully integrating into the DeFi space and niche by utilizing stablecoins to build a high yield portfolio. I talk about risk mitigation. I talk about risk tolerance. I talk about how to do it in this specific video breakdown. Now it's 38 minutes long and not a lot of people are going to want to take the initiative and watch this, which again, is why it's so imperative for you all to take advantage of your education in the now, considering again that not a lot of people are paying attention to this. There's 500 plus million crypto users, but again, the amount of percentages in terms of people that are actually involved in DeFi compared to the amount of people in the population that are actually involved in crypto is so minuscule, which is why it's so imperative that you learn to leverage DeFi now to grow your bags to become 1% of the 1% of the 1%, if that makes sense, right? And so not only do we have public DeFi strategy video breakdowns available utilizing stablecoins to, again, mitigate that impermanent loss, but we also have inside the Wealth 28 Club, here is some of the course material, a DeFi stablecoin strategy PDF going over a potential high yield savings account opportunity in the DeFi space if, again, you leverage DeFi properly. And I go into detail in this specific PDF talking about how just utilizing $30,000 as an example, you can make over $14,000 per year just off of stablecoins, right? In this specific PDF for the CYPRX Private Wealth 28 Club members. Now, again, if you want access to all of this course material, over 75 video breakdowns and more uploads to come for the Private Wealth 28 Club members week after week, we're always finding new gems, new DeFi opportunities, and always filling the void on new and updated information. You guys can go and visit CYPRXtrading.com. Come and tap into the information that we have. Again, even if you're not going to invest in DeFi, at least at a minimum, start to educate yourself on how to get involved in what DeFi is and how you, even after the next bull market cycle, can utilize it to expand your wealth and keep the money that you made always working for you. So last but not least, I want to play this last video clip of these panelists talking about how massive this market could possibly scale over the next consecutive couple of years. Let this blow your own mind and trigger, your own thoughts and price predictions and so on and so forth. But this just goes to show that so many people are failing and lacking on this opportunity in the now, because they're scared, they're not educated properly, and I don't want any of my followers to be those types of individuals. So take charge, take initiative, tap into this information. As always, many blessings to you guys. Hopefully you all enjoyed this video breakdown, always keeping it real for you guys, backing what it is that we say on the X space and on YouTube, constantly showing you guys proof that these financial institutions are for a fact interested not only in DeFi, but also in adopting these digital assets and integrating them into their core banking systems. Smash that thumbs up button and subscribe. Don't be afraid to reach out. The customer support email is in the description down below. If you guys have any questions about the Wealth 28 Club material, we can always hop on a Zoom call. You can personally, talk to me or ask any questions that you may have. If not, you guys can head over to CYPRXtrading.com, tap in, join the Wealth 28 Club. We'd love to have you on the team. Be cognizant, be aware out there, and I will see you all on the next video breakdown.
I think he's exactly right. I think this stuff all succeeds together or doesn't. I have no idea what the future will hold, but the incredibly, multi-trillion-dollar estimates for RWAs on chain in the next 6 years or so, it seems achievable to me. I think there's a lot of really basic groundwork that we still need to work on, like better user experience, better interchain operability. We are a multi-chain token, and we're still making it easy for our token holders to be able to do what they want to do with their money, and that's still actually quite difficult. So there's a lot of very basic things around the fundamentals that we still need to improve broader in the ecosystem, but I do think that number is achievable.
Enablers, yeah, okay. And Sergey, how big this can get in the future?
Just take the entire financial system, all of it, all assets, equities,
Nice.
commodities, real estate, gold, all of it, and then assume there's another 10 or 20% of assets more that haven't been generated because it's very hard to turn them into an ownership receipt. So there's an additional 10 or 20% of new things, shares of a farm, shares of a solar panel operation, shares in a restaurant, shares in owning a piece of real estate, carbon credits. So just take the whole thing and move around 10 or 20%, depending on the creation of more assets at the edges of the financial system.
Nice.
Yeah.
A big goddamn number.
Yeah, that's a big number. Thank you so much, guys.